Hello, everyone. How are you? Welcome to today's Facebook Live. I'm Erica M. And in a few minutes, we're going to start our discussion. Tonight's discussion is about financial literacy with Senior Investment Advisor Allan Small. I am your host, Erica M. And tonight, we are going to find out if you are smarter than a fifth grader when it comes to finances. So, Allan Small, who is my co-host tonight, is the guy the media goes to for insights on the market. He's on the radio, he's on CFRB, he's on 680 News in Toronto, and he's also Senior Investment Advisor with the Allan Small Group and Hollis Wealth. So I'm going to, through the magic of technology, invite Allan to join me now, and hopefully, through the magic of technology, he is here. Allan, thank you so much for joining me live on the YMC Facebook page.
Thanks for having me. Great to be here.
So, Allan, you and I are going to have some fun because we both know that the curriculum has changed a little bit in Ontario to include financial literacy, which is the first time, and some people think it's something that is long overdue. And this is something that you're quite familiar with only because finances are your middle name. As I'm talking to you, my dog is scratching at the door. I love him, but it is super annoying. In any case, we're going to talk about finances as it applies to the curriculum, but I thought it would be fun for us to test everyone who is watching right now. In fact, it would be great to see who's here. So if you're watching right now, let me ask you, anyone who is watching, did you know that the Ontario government has added financial literacy to the curriculum this year? I see that Andrea is watching from London, and I know Andrea, and she is a principal at a school. So Andrea, I'm wondering, did you know that financial literacy is something that is has come to schools this year? Can you hear my dog? He's so annoying. Janice knew, that's right. Catherine, yes, we just started. So hi, Eden. Hi, Mary. Go, Mary. Mary knew all about this. And so all of you who are on today, hi, Elaine. Thank you. Oh, thanks so much. Just let me let my dog out for a sec, okay? He is just bugging me like, come on, sweetie. Hi, we're live. Allan, this is cool. Don't worry. We're okay here.
All good. I have a dog myself. All good.
I see Kathy heard. Kathy knew about this new curriculum. So I see that we have a lot of smarty pants on the call today, which is fantastic. But really, are you smarter than a fifth grader as it comes to financial literacy, right? That's the big question. So Allan and I, well, really Allan, has come up with a list of incredibly challenging questions about finance that he's going to ask all of you.
Sure.
And we're going to play a little game. So you ask the question, don't give them the answer, Allan.
I won't.
Then the YMC team is going to be watching everybody and seeing what your answers are. And then we actually don't know what the answers are, the right ones. So once you tell us what the answers are, some of you are going to get some Starbucks cards because we feel like, my God, what parent can't use a Starbucks card, especially these days when we're, dealing with schools and the craziness of schools today. So Elaine, you're ready. Andrea, you're ready. Kathy, Catherine, all of you, Mary. Okay, let's hit them. Hi, JJ. I want you to hit them with the first question. Okay.
All right.
Here we
go. First question, something that I get asked a lot. A very simple question: what is a stock market, or what is the stock market? Toronto Stock Exchange, for example, the stock market that we talk about here in Toronto. What is a stock market?
Okay, so put your answer into the comment, and then we're going to watch you and see what kind of answers you come up. How financially literate are you? Okay, so the first question is, what is the stock market? Next question, Allan. I think if they don't know the answer right away, they just don't know the answer.
Probably not going to get it. That's correct. So the next question I have is something that, again, dear to a lot of parents out there, or hopefully is dear to many parents out there. What is an RESP? Not an RRSP, but an RESP.
Doo-doo, doo-doo, doo-doo. What game is that? I don't know. There's a game.
I think that's Jeopardy.
It's sort of like this. Okay, what is an RESP? Do you know that answer? Are you smarter than a fifth grader? Let's see. And for those of you who do get the answers right, someone from YMC may tap you on the virtual shoulder and gift you with a Starbucks card just for playing along and also for being, kind of cool about finances. All right, let's go number 3. What is the third question?
Third question, a bit of a trick question. I'll give you a little hint there. A bit of a trick question. What is the right age to start investing? What is the right age?
Okay. What is the right age to start investing? You guys know that answer? What is the right age to start investing? Look at Allan smiling. He is bursting. He is dying to tell you the answer. He will in just a few minutes. Okay. For those of you who just joined us, this is Allan Small, and he's a senior investment advisor at Allan Small Group, Hollis Wealth. And Allan has very generously joined us here today to help us learn a little bit more about financial literacy and to test all of us, the YMC parents, to see if we know our stuff. Okay, so the next question. We're on question number 4.
Yes, a little more challenging, this one, perhaps. Name 2 things that can have an effect on the stock market. 2 things that can cause the stock market to go up or, unfortunately, down. Name just 2 things. There are many, but you can just name 2.
I don't know.
Told you it was a challenge.
You're going to tell me in just a few minutes.
I will, yes.
Yes, we're going to answer all the questions. And I think these are these things that would be part of the curriculum, or is this a little more advanced, do you think?
Not really part of the curriculum. The curriculum is more catered towards investing and talking about, I guess, different things at different levels, depending on the age of the child. So talking about, what is money, different, types of coins, etc., all the way up to budgeting and everything in between. So this is a little bit different.
Actually, you very generously helped me out by putting together a download. So a document that any parent can download at no cost. Thank you for doing that. And we're going to put that in the comments right now. So if anybody would like to take some time and just click on it, you'll get all of those little tips that you put together for parents on helping their kids become more financially literate, which is really in keeping with the curriculum today. Okay, so we've asked 4 questions. The last one being, what makes the stock market go up or down? You asked for 2 things.
2 things, yes.
Now we're on question number 5.
All right. Question number 5 is, what's better to invest in, an RSP or a tax-free savings account?
Or a TFSA.
Or a TFSA. 2 types of accounts that I get asked about almost every time on the radio show. And what's better to invest in? Again, bit of a trick question there.
So Rose is watching, and she says she's been teaching high school accounting for the last 30 years. And she says it's amazing how little students know about basic financial literacy. Example, how a credit card works. And I know that in a few minutes, you're going to tell me something about credit cards that happened to you, Allan. And I think this will, probably surprise people that this happened to you.
Yes.
Seeing as you are sort of the maven of finance.
Yeah.
So the question again was, ask it one more time so that everybody can.
So what's better to invest in, an RRSP or a tax-free savings account, a TFSA? And again, another bit of a trick question there.
I like that. That way we give away fewer cards. Ha 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 ha.
Yeah, exactly.
And so for those of you just tuning in, we're going to give away some Starbucks cards to those of you who maybe get the answers right, and just for playing along with us, which is really great. Okay, we have our last question.
Last question, and a kind of a timely one, especially after what happened last night with respect to the presidential debate. Do U.S. politics play a role or affect the stock market? And it could be the U.S. stock market or stock markets around the world. Does or do politics affect the stock market? Can it affect the stock market?
So is that a yes or no? Are you looking for a yes or no for this one?
A yes or no would be great, yes.
Okay, so a yes or no. Does the U.S. Travesty of politics affect the stock market here in Canada? Is that what you're asking? Or
Canada or even the U.S.? Obviously, U.S. closer to home because their elections are going on now, but even here in Canada, yes.
Okay. So as the questions are coming in, let's get to work and let's go back to question number 1. And this is where I tell the YMC team, stand by, because the YMC team may be tapping you on the shoulder. And in fact, I may ask you to raise your hand if you got the answer right. Okay, so the first question was, what is the stock market? And the answer is...
Drum roll. The answer is the stock market, like other types of markets, a flea market, or even somewhere where you can go, such as an auction, is a place where individuals go to buy and sell publicly traded shares of a company. So you need to, it's a place that you go to, and it's not really an actual place, it's more digitally done, especially here in Toronto. So it's a place you go online to buy and sell publicly traded shares of a company.
Okay, so did anybody get that answer right? Put your hand up. Let me see if you wave or give me some. So of course you got the answer right because you're the smarty pants here. But anybody who was playing along with us, did you get the answer right? Put your hand up. So what the answer is, technically you're looking for a sentence that says it is a place where stocks are publicly traded. Is that correct?
That's correct. Where you go to basically exchange, so you money or cash to buy shares from somebody else. So you make a bid or an offer for some shares, and another person has to accept your offer and sell you their shares.
Okay, we have Aileen and JJ and Jasvir they all said that they got the answer right. That's not bad. 3 people. I think we could do better than that. Come on. Okay, Catherine says I buy stocks. Okay, not bad. Okay, question number 2. What is an RESP? So the answer is...
Drum roll. An RESP is a registered education savings plan. In my opinion, it is the best way to save for your child's post-secondary education. Money that you invest in an RESP, whatever you put in up to a certain amount, $2,500 per child, the government will match up to 20% of what you put in up to $2,500, and that money is able to grow tax sheltered or tax-free for your child, and you use that at some point down the road, let's say usually around age 18, when they go off to college, university, culinary school, or whatever type of school they wish to attend.
So there are companies that are like RESP companies.
Yes.
What do you think of those?
Well, a lot of RESP companies, that's really all they do.
Yeah.
And unfortunately, a lot of the investments that they make on the investor's behalf, a little bit opaque. You're not really privy to how they're investing the money. A lot of the organizations, once you start investing with them, it's very hard to change. Let's say you're not happy with the service or the returns. It's very difficult to then all of a sudden say, well, can you transfer my account somewhere else? A lot of the banking institutions, financial firms, investment places like with me, for example, you invest, it's very transparent. You know what you see what you get. And if you're not happy, you could easily transfer that account to another organization. So a little bit more flexibility, I think you'll find outside of those types of companies that you're referring to.
So this is a really good question. Andrea asks, can you use an RESP for sending your child to flight school if your child doesn't go to university?
It's a great question. And so probably the best way to answer that is if you go to the CRA website, they actually have an area where you can look up all the different schools that you can use or use your money towards. And they have a long list. And that list has grown substantially over the years. I remember when it first started, the list was fairly, fairly large, but relatively small compared to today. It also includes universities or colleges or schools outside of Canada. So a lot of people ask me that question as well. Can my son or daughter go to a school outside of Canada? And the answer is yes, if it's on the list.
You just froze, but that's okay because I think you're coming back, hopefully. Because I told Allan that if he freezes tonight, we're dead. Because usually I can talk about anything except not this. So Allan, if you're totally frozen, you can always hang up and come right back. And I can continue to go on to the next question because right now you are quite frozen.
Can you hear me okay though?
I can hear you, but it's not as much fun because I can't really. So I don't know if any of you were watching last week when we were doing a Facebook Live with Jan Arden. It was the funniest thing because she kept on freezing and coming in with no audio. And anyway, here we are. This is way better. Thank you so much. Allan Small, ladies and gentlemen, media celebrity in the world of finance joining us. Okay, Allan, let's go to question number 3. Let's get the answer. What is the right age to start investing?
So a bit of a trick question. There really is no right age to begin investing. My recommendation is the sooner you start, really, the more you'll have at the end. And, there's not a lot in the investment world we can say is guaranteed, but from pretty much everyone's experience, the earlier you start and the more you can invest over time, the more you will have at the end, whether it's saving for retirement, saving for your child's education, or saving for that house, whatever it is that you're saving for, the earlier you start, the more you'll have. We always like to say, or at least I always like to say, investing is time in the stock market, not trying to time the stock market. A famous saying that we always we like to say.
So when is it too late to invest?
Really never too late either. And, I have individual investors that will invest in their 70s, their 80s. I have clients in their 90s. So it really just depends on your goals, your investment objectives. That will dictate what type of investment you have. So perhaps when you're a little bit older, maybe growth isn't as important as capital preservation and earning some sort of income, either interest, dividends. Maybe when you're younger, growth is more important. So you're more geared or have investments geared more so towards growth instead of the income side of things. And you can take more risks, I guess, when you're a little bit younger, more time to make up any potential losses.
So interesting here. If I can grab this little comment here, Richie says the earlier you start, the more doubling periods you will have.
Well, yeah, that's a great point. And there's a simple rule called the rule of 72. So very simply how to explain that is if you're averaging, let's say 10% rate of return, you divide 10 into 72, and therefore you should double your money every just over 7 years, 7.2 years. If you're averaging 7% a year, you should double your money every 10 years. So that is correct. In theory, the longer you invest for, the more doublings, I guess, if that's the way of saying it, the more time you should double your money over time.
I'm going to go back here for a second. Catherine has an interesting question that her son has autism, special needs. She's put an RSP for him, but she's not sure if he will go to college. Actually, you should have put an RESP, right, Catherine? May I use an RESP for me to study to improve my skills even more?
Yeah, so RESPs, it's interesting. So there's a lot of different things within that question. So age plays a big factor in RESPs because the government will give you a grant, as I mentioned earlier, 20% up to your first $2,500 until your child is 17. So in the last 2 years, 16 and 17, you would have to have invested a certain amount of money prior to that to be eligible to get that grant money in the last 2 years. And most people are eligible. And so after 17, you're no longer able to get a grant. So if you are, I guess, an older student, you can still invested in our RESP still have that tax-free growth, but the grant, that amount from the government, that free money that we all love to receive from the government for an RESP, unfortunately ends at age 18. So there are a lot of options this parent could have. They could pull the money out, anything they pull out, their own money that they put in, tax-free. Any money, unfortunately, the government gives has to go back to the government, and you just have to pay some tax on just the growth in the portfolio. So there are a lot of options for this person. Definitely, you can send me an email or get in touch with me, and we can go over your specific situation a little bit more in depth.
So Allan, you're like a media star. You have radio shows, you're on TV, you're offering people to call you. Do you take new clients? And if so, do they need to have sort of a certain amount of money for you to take them on as a client?
Yeah, a question that many people think, well, I'm not big enough to have an investment advisor. So the answer to your first question is yes, I am taking new clients. My job as an investment advisor, I look at my job as one that is to help as many people as I can. That's what I try to do. And as you said, I'm in a lot of different places. I meet a lot of people. And so my criteria is not size of portfolio. I've taken new clients that are just starting out. If I believe I can add value to a person in what they're doing, if I can help them with their portfolios, if I can help them get ahead in life through investing, then I will help them. The odd time you come across somebody that you think, man, maybe I can't really provide, some value to them if they're, let's say, looking for the best GIC rate. A lot of those types of scenarios, they may just go to their bank to find that. But when you look at investing, there have been very few people that I feel that I cannot help. So the answer is yes, I will take on new clients and help them as best I can.
Okay, cool. So listen, I have one more question, and then I'm going to get to the next answer, okay? Because I think this is a really great question. I'm going to throw it up here. Linda asked, where is the safest place to have my money during COVID?
That is a very interesting question, because I think it depends on who you're asking. Some people might say under their pillow, under their mattress. I would say the answer to that question really depends on the type of investor you are. If I ask that question to more aggressive investors trying to take advantage of these difficult times, these more difficult times, they may say a technology investment, a tech stock. I ask some others that are a little more concerned about what's going on, cases going higher, et cetera. They may say in a GIC or a bond or something paying interest, something that's lower risk. So I really think it's really dependent on who you talk to and what type of investor I'm dealing with. That really will dictate where the best place for them to be is.
Okay, so the next question that we have to answer is, name 2 things that affect the stock market. Let's see who got these answers right. And of course, put your hand up if you think you got the answer right. Okay, Allan, what's the answer?
Well, there are many answers, that's for sure. And
wait a second, how can we play this game if there's many answers?
Well, it's an easier, I guess, opportunity to win.
Okay. Yay.
There you go. So things such as, interest rates affect the stock market. I'll say it. Politics can affect the stock market. I think that's a question for a little later. Things such as weather can affect the stock market. Storms, hurricanes. If there's unrest in the world, people going to war, that obviously can affect the stock market. Commentary by individual people, so influencers in the stock market world. Warren Buffett comes to mind. If all of you watching know who Warren Buffett is, he has a huge influence. TV personalities can have a huge influence on the stock market. The Federal Reserve, the Bank of Canada, central banks. There are a lot of people that have, and of course, COVID-19 can have a big effect on the stock market. So
I'm curious, who has gotten the right answer, since you named off like 42 different ways stock market to be affected? I would think that everybody must have had some answer right. Is that true? Put your hand up, wave. I see Andrea, Carney, Elaine, Richie. Not bad. 4 people. That's not bad. Lots more people. Oh, there's a Janice, Tabassum. Good. This is good. So we have a financially literate group of people here, which is fantastic. Let's go to the next question. What's better to invest in, an RESP or a TFSA?
Okay, so I think it was our RSP, right? So
RRSP, right.
right. So again, it's one of those questions where it depends on the individual person. Our RSPs I tend to recommend or use for individual investors that, oh, I think I froze again, but hopefully you can still hear me. We can use for individual investors that.
Wait, you're going to have to jump off because I like to see your face.
Right to see my face. Okay, give me a second here.
Back off. This is kind of fun. I get to show off how tech I am, that I can make this happen with no things. So we're finding out the question, is it RRSP or TFSA that is better to invest in? And here he is. Welcome back. Allan, hold on. Let's get you back up. And here he is. Okay.
All right. Excellent.
So you're answering.
I was saying, so again, it depends on the person. It depends on their investment objectives. If you need a tax deduction, an RRSP works fantastic because it is one of the few vehicles that you can invest money in, and you actually can write that amount off when you do your income taxes. So if you put in $10,000 or $5,000, you get to subtract that from your income when you go to do your income tax. So those that need a tax deduction are RRSPs. Those that are investing longer term, RRSPs can work. Those that perhaps may need the money sooner but not sure, tax-free savings accounts in that case, because you can always tap into a tax-free savings account. The money you pull out is not taxable like an RRSP would be. And your money will grow tax shelter just like an RRSP will for as long as you keep it inside. So really, I think the differentiating point, I should say, is time horizon, and if you need that tax deduction. If you need the tax deduction, RSPs make a little bit more sense than a tax-free savings account.
So I don't know if this is going to upset you, but I'm going to bring up something like Wealthsimple or these kinds of companies that are kind of your direct competition now. They're, I guess, are they your competition?
Not really. My direct competition would be other advisors in the wealth management area. The Wealthsimples and the discount brokers or the what do they call them? Robo advisors or whatever they call them now. They're not really our competitors. They're for a different type of investor, I think. But the good thing is people like me, we use the same or can use the same technology, the same research, the same analysis that these companies use, except the benefit of using people like me is you get to talk to somebody like we're talking today. Whereas if you have a question, you have a concern, back in March, the markets dropped 40%. Who are you going to call? Wealthsimple, at least I'm not sure, but I don't think there's a person to call and express your concerns to. My clients picked up the phone and just called me, and we had a chat, and hopefully I was able to make them feel better. So big difference between the online brokerages or the robo advisors or whatever they call themselves and the actual people themselves like me. Very, very different. I don't really look at them as competition as much as just a different way to invest than what I provide.
So we have one more answer to get to, and then I want to open this up to anybody who is jumping in. If you would like to ask Allan any question about your finances in general, the stock market, investing, financial literacy, the idea here is for all of us to become a little more educated. So when our kids come to us and say, "Mom, my teacher has just taught me something about the stock market," we'll be able to respond to them, right? As well as this is very useful for us in terms of how do we invest money and make money or save money, right? Which is, are they not the same, right? To invest money and save money, is that the same thing?
I would say no. I think many people are good savers, but I think in actually putting that money to work for you, another saying we use, you want to have your money work as hard for you as you had to work for it. So I think working hard to be a saver is one thing. Getting that money to work hard for you in the appropriate way, appropriate balance, I think is totally different.
I like this comment from Rochelle. Take the time to answer a questionnaire with your advisor to really determine well-suited investments based on knowledge, risk tolerance, time frame, etc. Is that accurate for you? Would you agree?
Absolutely. We call that Know Your Client, and it's really every application that any investor fills out with their investment firm they're working with. that is what we do. We call know your client information, and very, very important.
And Andrea has a comment here. I find as a woman, the most important quality is someone I can trust with my money is how well they listen to me and take me seriously. And is it hard for you to listen? Like, and I'm not being facetious here, but you know so much. Do you find it hard sometimes to listen when you just want to talk and give people information?
Not really. I think when I first started, I was maybe a little quicker to try and in either correct or educate. But now I've been doing this now for almost 25 years, and I've met so many people over the years. I find I just kind of sit back, and the first thing I do in a meeting is, okay, tell me about you. Tell me what you're looking for. Tell me what your wants, your goals. And I just sit back and listen. And then when they're done, then I obviously can make comments and explain things and how they work a little bit more. But it's kind of a skill I've acquired over the last 23, 24 years.
To be a good listener. Carney has a good question here, which is really in keeping with our discussion right now. What is the best way to teach your kids about investing? And this one is especially interesting. I'm curious about your answer because you have 4 kids.
I do.
So are you teaching your kids about investing? And if so, how are you doing it?
I think so. I think just being around me, and I work a lot. So my kids are knee deep in finance every day around here, when I'm watching on the TV or talking to people. But I think, again, it depends on the age of your child. But I think overall, getting them involved always makes sense. I talk to a lot of individual investors, and they come and they say, listen, my son or daughter has a little bit of money. What do you recommend them, and how can they get involved with investing? And the one thing I always say is, what do they like? What items do they use? What do they watch on TV? Do they drink coffee? Do they watch Disney? Do they go to the movies? Do they bank with Royal Bank? Do they have their own bank account? And I find that if you can get them involved in things or buying things that make sense to them, that they can relate to, I think that's the best way to get their feet wet in the investment world. And obviously I'm talking maybe about older kids now, not younger kids. Younger kids, you can just introduce them to money. What is money? What does money mean? Should you just blow money on anything out there? So I think for older kids, it makes more sense.
Do you pay your children to do chores?
My kids are young right now. I have paid them at times to do certain things, but still not. I remember when I was young, I know my mom used to give me allowance to do my chores. So my kids are not yet at that age where they have that many chores to do yet, but definitely we have paid them to clean out their drawers and clean out their rooms a few times, yes.
Okay, Amy has a question here that I don't really understand it, so maybe you can answer the question and explain it at the same time. Are savings accounts protected? I've heard of the CDIC. How does it factor in? What's she talking about?
She's asking, I believe what Amy's asking is, if something were to happen, is her money safe? Is it protected? Is it insured? And the answer is yes, up to a certain amount, depending on what type of an account you have, usually about $100,000, CDIC will cover. So that's why a lot of people, what you find is they don't put more than $100,000 into a GIC, or they don't put more than $100,000 into a specific account. So yes, you are protected to a certain degree. Obviously, CDIC, well, who are they? Well, technically, they're the government. So they'll come in and protect you. Understand as well, investment accounts are also protected up to $1 million per account under the Canadian Investor Protection Fund, CIPF. That's that acronym there. And a lot of people ask me about that as well. And I would say if you're investing with a major investment firm, a bank, then they are Canadian. They also are part of the Canadian Investor Protection Fund.
Here's another question. This is from Chris. Can you lose money on your TFSA, or should you always be gaining interest?
Well, again, it depends on what you invest in. So if you invest in an interest-bearing investment, like a GIC or a bond or something that's just paying you simple interest, then can you lose? Not really, because you're just going to collect interest. And then when that investment matures, you get your money back. If you were to invest that tax-free savings account money into, let's say, the stock market or a mutual fund, then yes, it is possible that that investment can fall in value.
Mm-hmm. Okay, and Linda has a question that I think a lot of people would like to know, which is she's struggling to figure out where to keep her RRSP, mutual funds. And I guess this would fall under that risk-adverse getting to know the person. How would you respond to Linda?
Exactly. Depending on risk tolerance, it depends on objectives, time horizon, how long are you investing for, how soon will you need that money. Mutual funds definitely can play a huge part in someone's portfolio. It just depends on the type of investor you are. Some people don't like mutual funds because mutual funds have a fee attached to it, a management fee as they call it. So some people unfortunately have been negative on mutual funds the last 5-10 years, but I'm not. I think mutual funds are for the right investor. At the same time, individual stocks or bonds or other investments are for the right investor as well. It just depends on what you're looking for and all that information that we said earlier, time horizon, risk tolerance, etc.
Okay, this is a great question. How much do you need to start investing, Allan?
And I think, as we said a little earlier, never too young to start, never too old to start. At the same time, I have clients who put in $25 a month, $50 a month. It's whatever you have at the end of the month. As I say, when you do your budget, whatever money you have left over, and you don't need to enjoy life. You're only 25 once, 35, 45, 55 years old once, and you want to enjoy. You want to go out and enjoy yourself. I know under COVID, a little bit difficult these days, but you want to enjoy life. So I always say, whatever you don't need, give to your investment advisor, put it into your account, and whatever that dollar figure is, if you can put it often or not as often, whatever it is, that's what you do, and that's what you use to invest.
I feel very safe listening to you. Obviously, you know what you're talking about, and it's always fun when I turn on the radio to hear you, Allan. I really want to thank you. I see a lot of people here thanking you so much for everybody. For those of you who won some cards, some Starbucks cards, congratulations, you are financially literate. I'm going to type in my email address, and you can email me. Look at this. Watch this. Through the magic of technology, I'm inviting you, that's right, to email me directly, and we'll get your email address so we can send you your cards. Hopefully that is going to come up. And if not, just leave a comment here saying that you would like to reach out to us, and we'll figure out how to get that to you for sure. Allan, for those people who are watching and they would like to talk to you and ask you questions, not necessarily hire you, but just ask you questions, are you open to that?
Absolutely. Absolutely. I get that all the time. As you can imagine, having the radio show on Sundays, I get a lot of people texting, sending emails, calling the office. My website, allansmall.com. You can send me an email, allan@allansmall.com. Whatever you like, you can get in touch with me. More than happy to answer your question. And, a lot of people get a little nervous. Is my question silly? Is it a valid question? No question is too silly. If you have a question, I'm sure many others have the same thing. And I've probably heard most questions over the years. So
how else do people learn if you have to ask those silly questions, and then eventually you start to become more educated. And just like when your kids, now we're talking about financial literacy, if your kids come to you with a question that is silly, you would never say that's a silly question. You would say that's fantastic for you being curious enough to ask, those questions. So if people call you, they're going to start enhancing their financial literacy, which I think is fantastic. Tabasum is saying, what station is your radio show? You get to plug it.
There you go. News Talk Radio, AM 1010 CFRB. Oh, I think I froze again. But
you just froze again. Oh, that's so Tabas. Okay. Oh, Michelle says CFRB. Your fans are all over the place. Right, I'm not going to force you to jump back in and out again. I want to thank everybody for joining in. I threw my email in there. So for those of you who were tapped on the shoulder and won Starbucks gift cards, congratulations to everybody who joined in tonight. Thank you so much. And especially a big thank you and applause to Allan Small for answering our questions in such a simple, concise way and making none of us feel kind of dumb about our not really knowing everything about the stock market. Next week, we're going to be talking about the future of education with the Fuller Academy, and I'm really excited to introduce you to them because they're doing some really new and exciting things with education, and Lord knows our education system needs to change. So I'm going to say goodnight to everybody. I'll see you online over the week and next week right here on the YMC Facebook page. See you later. Thanks, Allan.
Bye-bye.